Good morning and welcome to the Monday Call, brought to you by NZ Funds. I'm Stephan Clark, Chief Client Officer at the firm. Since the mysterious origins of Bitcoin to the explosive growth of altcoins and decentralized finance, crypto is evolving at a breakneck pace, challenging traditional notions of money and finance. Today, crypto is more and more mainstream than ever, with a growing list of major financial institutions around the world offering crypto products and services. Binance, founded in 2017, quickly became a dominant force in the crypto world, establishing itself as the largest cryptocurrency exchange globally, now processing a staggering 76 billion in trades every day. Our special guest this week is Ben Rose, Binance's Australia and New Zealand General Manager. We'll be discussing Binance, the evolution of the crypto market, and how Ben sees the future of the sector unfolding from here. Thank you very much for joining us, Ben. It's awesome to have you on the Monday call. I thought we should kick off with a little bit about you and how you find yourself in New Zealand as an English person of English origin and working for the firm Binance. Take us through that, please.
So look, thanks for having me. I've been in New Zealand actually for 20 years now. So far more of my working life than I spent elsewhere. I started off in the UK. Feels like a long time ago. I did a completely useless but really interesting degree in Spanish and Portuguese, specialising in medieval literature. So love that, but not that easy to turn into a job. So a good friend of mine suggested I work in advertising or sales or something related to people, and I ended up doing some internships at some ad agencies in London and just fell in love with the world of business, the world of comms and marketing, and that brought me over to New Zealand in 2004. So you'll remember the 100% Pure New Zealand campaign. So I was lucky enough to work on that, and I, like most POMs, came over just for a short contract and forgot to leave. So I came over, started working at an ad agency on that campaign, and just fell in love with the place. And have made my home here, met my wife here, we've had children here, and absolutely love it. So a career in advertising later on turned into a career client side in marketing and starting to spread into broader sales roles. And that was when I really discovered the world of finance. So I actually came to crypto with a background in sales and marketing and exec leadership roles in listed and regulated traditional finance businesses. So ASB Bank Group, Sovereign Insurance, NIB, AMP. And so that was my career. My career was growing top and bottom line for those kinds of businesses in a more traditional financial market. And 2020 was when I first discovered crypto as an individual. You'll remember we were all locked at home without much to do, and so online trading and crypto suddenly boomed in volume, and I was one of those. I started looking at it, and I thought, hang on a minute, this is interesting. There's a lot of noise about this space, both positive and negative. I needed to understand it. I needed to understand where the truth lay, and it was somewhere in the middle. And just the disruption of the whole thing kind of appealed to me as an individual. And I thought the fact that you could custody your own assets rather than trusting that someone else was going to do it and just quietly probably lend it out, 8 or 9 times. I like the fact that in this part of the world where, we've got countries near us where sometimes 30-40% of the GDP is remittance from overseas. Well, all of a sudden there's this option for doing it in seconds and costing cents. And I just found that inherently really interesting. And got into it as an individual, not massively. Had some very boring bets on Bitcoin and holding on to those and seeing how that went, and looked at a few meme coins as well. And then Binance announced that it was launching into New Zealand, and so it put two things together that I loved. One was crypto, and the other one was launching a big brand and a big business into our country where there often isn't a lot of competition in new spaces. In fact, in some old ones as well. And I looked around at the market and I thought, yes, there are crypto players, but if New Zealanders can't access the breadth of services that others can in other countries, and so I found that pretty exciting, and put my hand up for the job, and luckily enough got it. And so I was employee number one at Binance New Zealand, and that was a ride in itself, having to get the registration and build the team and do all of the things that you have to do to establish a business. And then we've built that to a really good size, and we've got over 330,000 registrations in New Zealand, and we did $4.5 billion of trading last year, so really proud of that. And then I had the opportunity last year to also take over the regional role. So the general manager of Australia, who I reported to, moved on, and so I now run both regions, so both countries. So I do that from home here in Takapuna, which we can talk about. But it's look, it's really exciting. It means I get to work in this market, which is nascent and evolving in terms of crypto. I get to work in the Australian market, which is a bit more mature and a little more competitive and a bit more developed. And yeah, really enjoying it.
So obviously, it's interesting, probably being able to draw a parallel between Australia and New Zealand. How far? Let's not, I don't have the word ahead, but ahead are they in sort of the maturity of the market? Would you say?
So it pains me, they are ahead. So a really good way to look at that is, so Chainalysis, who are an online analytics firm, they do a report every year of cryptocurrency adoption all around the world, and they rank about 155 countries across a whole lot of different metrics, including the obvious ones like penetration, but also the number of assets available, the amount of on-chain activity done by traditional finance institutions, the number of Bitcoin ATMs. There's a whole lot of different metrics. But out of 155, Australia is pretty much always top third. So I think it was 50th last year. And New Zealand is usually bottom third. So we bounce around, sometimes in the 80s, sometimes in the 90s, but we're certainly a long way back. And I think that the best estimates in terms of penetration are, in Australia, you're looking at 1 in 4 Australians has some form of crypto, and in New Zealand, it's about 1 in 10. So it's quite a difference, and you see that it's like lots of industries, right? Because there is a bigger market there, there are more players there. Because there are more players there, there are more customers there, and it's a virtuous circle. Here, it is a much smaller industry, and so there aren't that many players, and we're the only global exchange to have set up business here. Hopefully, we want that to change, and there are a number of things that could do that. But I think New Zealanders have shown an appetite for crypto, and certainly, our growth as a business since we launched in 22 has been really fast. But there's a long way for us to go, and I think we need to work hard as a country to make sure that people understand the negative and the positive of crypto, because the fact is, lots of other countries around the world are reaping benefits from it at a not just an individual level, but also tax and job creation. So I think there's a definite opportunity for us to pick up the pace a little bit here.
When you first started exploring it, you must have formed a bunch of initial impressions, and I'm sure we're going to touch on how they've evolved. But at a high level, what were your first thoughts, and then are there any major areas that you've shifted your thinking since then?
So I think living in New Zealand, the reality is that typically the media, talking to a couple of years ago, the media, when it reported anything on crypto, it was either someone had been hacked, or someone was digging through a dump trying to find their hard drive, or exactly. It was all it was just bad news, and it was negative, and it was about crime and scams and those sorts of things. But that when I was looking into it, as with lots of things, when you start to look at offshore news sources, you think, well, hang on a minute, that's different. I'm reading quite a different story in markets like Dubai, Hong Kong, Singapore, the States, Europe, to what I'm reading back here. So why is that different? And it seemed to be a lot more balanced in other markets where there was a more mature industry. And so I think that is changing, and that is changing for a couple of different reasons. I think crypto adoption just continues to grow. More and more and more individuals want exposure to it, and so the numbers show that. And so because now there's more interest in it, the news media want to serve the need, and they want to give a more balanced view. And so I'm certainly experiencing inbound inquiries from media outlets in New Zealand and Australia about, tell us how this all works and where's the market going now, which we didn't used to. So that's certainly changed. I think the other difference is the institutional money that started to come into the space through the ETFs around the world. And so that's suddenly given, the asset class in some people's minds, a mark of legitimacy, because if, Van Eck and BlackRock and Invesco are looking at this, then they've clearly done the work, looked at the data. The asset class has been around now for long enough for them to have data to compare it to other assets. Now their ETFs have been launched in multiple countries, including in Australia recently. So now there's a lot more interest. There's a lot more volume going into crypto. So it's still pretty early days. I think we're $2.5 trillion market cap, but there is a lot more interest, and so that's changing the media narrative somewhat.
Yeah, we call it, well, I like to call it institutionalization. It's a very long word, but it is happening. You just see it. I mean, you can buy crypto future, Bitcoin and Ether futures. There's the ETFs, obviously. Now, lots of banks are willing to, or more banks are willing to custody it. JP Morgan Chase being one, for example. And so that's on one side of the equation. And then you've got, obviously, some industry-related challenges with FTX and so forth on the other side. And they kind of push and pull. And then, and regulators seem to move depending on whether you're with the SEC or the tax department or something like that, in different directions. And I'm sure we'll touch on that. But before we launch into all of that, tell us about the scope of the market that Binance serves and the market that you're focused on. How do you think about it? Because there are hundreds of coins out there and currencies. Binance doesn't have all of them on its platform, is the first thing. And then obviously there's lots of different customer types.
So Binance has 200 million customers around the world at last count. We've got about 1.3 in ANZ, 1.3 million. So the thing about crypto is there's a very low barrier to entry. So you could create a coin after this call, and it will take you minutes. So there are actually thousands and thousands and thousands of coins and projects. So any exchange, and an exchange, really is just somewhere where you can buy, sell, and trade or hold coins, has to decide which it's going to offer and have its own listing criteria. So because regulations differ from country to country, there are countries like Japan where they will, the regulator will publish a specific set of coins that's allowed. There are others where they don't. So we, as a default setting, we list at the moment about 350 coins. And we've got, listing criteria around each of those, which are, the sorts of things you'd be very familiar with in traditional finance. So, the team will do due diligence on the founders, the project. There'll be conditions around how, shares need to be allocated, and liquidity and the size of the project and the size of the audience. And a lot of that in the crypto world has to be audited in different ways, because crypto project audiences tend to be online and on social media platforms. But so we will offer that number. We'll constantly review that, and the ones that we offer, the ones that we don't, and that'll be based on a number of different factors. But typically, you'd see Bitcoin being around half of the volume traded on most exchanges, and then the broader they're offering, the more that changes. What's changed through 2024 actually has been the growth of altcoins. So there are two categories of crypto. It's ridiculously simple. You've got Bitcoins and you've got everything else. So the everything else they call altcoins, alternative coins, and so we've seen growth in those really, really pick up this year. So Bitcoin is the largest crypto, and some people see it as extremely volatile from outside the space, but some in the space see it as one of the less volatile coins. And so we've got people chasing more returns elsewhere and with different risk profiles. And so coins like Ethereum and Solana, BNB have started to pick up, as have meme coins. So meme coins would be a token that's got absolutely no utility, other than it's the community see it as fun to trade and enjoy kind of being part of that community. And I think with crypto, it's the big difference between crypto and traditional finance is that community aspect. So unlike the vast majority of other financial services and products, crypto started off in retail. It started off in people hanging out online, creating this thing, and it's worked its way into institutions because of the the growing demand for it, but not the other way around. Usually, as you know, products will start in institutions, and then a slightly watered down version will become available for the general public later on. So the crypto community is it's something that it's pretty unique to crypto, and that's why you get those those meme coins and those kind of communities where people hang out online talking about their favorite token, where they probably don't talk about their favorite term deposit or credit card with us.
You're hanging out with the wrong communities, I imagine. So nothing's more exciting than a term deposit. Okay, so what do you think the biggest misconceptions are in Australia and New Zealand in relation to the market?
Specifically in New Zealand, I think the perception that this is fringe, that it's not going to be around for long, I think that's wrong, and that's proven to be wrong through the sheer trading volumes and the the level of interest. I think one of the other misperceptions is that crypto is doesn't have a use case. It's just used by fraudsters and scammers, and what's the there's no other point to it. So I think it's really important to dispel that myth. So I mentioned Chainalysis before. They do a lot of work at understanding what percentage of flows in crypto are sources of illicit activity, and the most recent had it at 0.29%. Whereas the UN says that traditional fiat currency is somewhere between 2 and 5%, and they don't know whether it's 2 and they don't know if it's 5, because it's a lot easier to launder traditional money than it is crypto. One of the great things about crypto is it's all online, and you've got a ledger of transactions that's immutable. So it's actually a terrible place to hide money and launder money and hide from authorities like the tax office, because it's all there and it's all there forever. That information will never go. Not the case with with fiat money. So I think those are two big misconceptions which are slowly changing, but we've got a bit of work to do.
So when you think about adoption, what do you think the next stage is in New Zealand for adoption to kind of move from its current stage to becoming more mainstream?
So I think there are three stages of adoption. The way I look at it, I think that at the very beginning, when something new comes along, whether it's crypto or Amazon selling things online or EVs, in terms of the automotive industry, I think the very first response from the incumbent industries is just to dismiss it. This is not a thing. No, it's never going to catch on. And then eventually it does catch on. And so then you move to sort of denigration. Then you get the likes of, you get CEOs of big banks saying it's a Ponzi scheme. And people are very vocal about how terrible this product, which actually replaces a lot of my services for cheaper and faster, is. So that denigration happens. And then when the adoption continues growing in spite of that, then you get to imitation. So we're actually at that stage now where some of those banks whose CEOs took fulsome part in denigration, they are now some of the world's biggest stablecoin issuers. They are now, doing cross-border transactions for institutional clients with crypto products. They've built blockchain businesses. They're hiring people out of the industry. So, we saw the same. We saw the same with retail, with retailers rushing to become like Amazon once it became clear that Amazon was the dominant force. EVs were never a thing, and now, of course, all these traditional car manufacturers are getting massively into EV, so that Tesla don't take over the industry. And so, I think where we're at for Australia and New Zealand, I think we're at the dismissal stage still, because we just tend to take a bit longer to adopt new technologies, because technology providers also take a bit longer to get here. In Australia, we're moving from denigration into imitation right now. So in Australia, actually, the adoption has been so big that the major banks now, NAB recently announced they're investing into Zodia, which is a custody business. All of the major teams have blockchain. Sorry, all of the major banks have blockchain teams building propositions. There have been pilots with the Reserve Bank of Australia on stable coins. So now that's happening. So we were at slightly different stages. I think one of the interesting things which is happening to both crypto and traditional finance is the hiring of talent from both sides, and I think that's a really positive thing for each. So, I'm not atypical with a banking background. I've got staff in my team who are from places like JP Morgan and HSBC, and that's deliberate, because the traditional finance industry over hundreds of years has, of course, developed some amazing capabilities. What it hasn't done is maintain agility and speed, because these are big businesses, whereas crypto businesses, because they're young and then they're more nimble, they've got the ability to respond to customer needs more quickly, but their risk management practices haven't been as robust as traditional finance. So I think the convergence of the two will be both for good for both sides.
Are there major, when you sort of think about adoption, are there major indicators that you can point to other than just the adoption rate that say, okay, now it's here? Is it in the US? You mentioned cash machines or earlier.
So there would be three. I think the main ones are, number one, the volatility of the local currency. Number two, a licensing framework, and number three, access to banking services for businesses in the sector. So volatility of the local currency. So in developing countries where the local currency is highly volatile, crypto usage typically will be quite high, because people are looking for an alternative store of wealth to fight inflation, or there'll be people working. There'll be consultants and developers working for offshore businesses being paid in stable coin because the local currency is too volatile. Also, you'll have high proportion of unbanked people, so they'll be looking at crypto as a potential alternative to that. So the volatility of the local currency is number one. The presence of a legislative framework for the industry is number two. So what that does, if you look at somewhere, let's take Dubai for example. So Dubai has said, okay, we've got dependence on natural resources, on oil. We've got to diversify away from that. Finance is going to be one of the ways we're going to do that, and we want to attract Web3 businesses here, blockchain and crypto businesses here. So they've created a regulatory framework that gives businesses the ability to apply for a license, a crypto license. The reason that's important is it does a couple of things. It gives locals protections that they wouldn't have otherwise had. But it also gives the businesses in the sector the confidence to invest and to innovate, knowing that they can do that. They can do that safely, and so in countries like that where they have clear frameworks, you get businesses like Binance, but also other competitors starting to invest in that market. You also get local startups thriving there without having to go offshore for that clarity. And then the last piece is access to banking. So access to banking is a real challenge for many in the crypto sector, particularly in Australia and New Zealand. And so countries which want to embrace crypto. Hong Kong was an example, Dubai is another one, Europe have done the same. When they introduce a regulatory framework, they also have guidelines in there around debanking and banking. So they know how important it is for a business to have straightforward on ramp and off ramp for their customers to transfer their fiat currency into crypto. When countries have that, adoption rates go up because it's easier and it's cheaper. When they don't, and New Zealand will be an example where it's very tricky to get banking, you end up with workarounds like customers having to pay card fees or use P2P marketplaces, and so there's more friction and there's more cost, and so it holds back the growth of adoption, which some would argue is positive for the banking sector and negative for the crypto sector. But those would be the
So that's where it's banking services for the individual customers wanting to use your services, or banking services for providers who are trying to provide their customers with services.
of those actually. So in the absence of guidelines, banks are private businesses, so of course they've all got their own risk appetite statements, and they're all allowed to accept or decline any customer they wish. So in the absence of guidelines, what that looks like today is that the vast majority of Web3 businesses in New Zealand can't get banking services. And actually, Callaghan Innovation put out a paper around it, around debanking in New Zealand. I think it was last year. And also individuals who purchase and sell crypto, depending on who their bank is, sometimes do and sometimes don't get blocked and debanked.
Right. Okay. What is Binance doing to improve customer awareness in New Zealand of crypto generally, and I guess the challenges locally?
Yeah. So the very fact that my team and I are here is our major investment into doing that. So we spend the vast majority of our time, first of all, educating members of the public and running campaigns. And we've got a thing called Binance Academy, which is an information source where people can educate themselves. So we promote that. We do workshops in universities. We do in-person meetups all around the country. But also we do a lot of work in media. So I do have conversations like this, which will be typically educational in nature. So I'm never out there shilling a coin or getting people to invest and doing all that kind of thing. Although there are often fake versions of me on the internet who pretend to. It's all educational. It's all about dispelling myths. It's all about helping people understand the opportunity that there is here. And then there's a lot of work that we do behind the scenes. So we ran training workshops for the New Zealand Police, for example, on tracing transactions. We do, and we do that for the Australian Tax Office and for the Australian Federal Police. So we do a lot of work behind the scenes there. Also, a lot of work with policymakers, and that's around educating them, because this is a discussion that is now being had in Parliament, because there was a select committee did an inquiry into cryptocurrencies. With adoption growing, ETFs happening overseas, our MPs are now reading about this online, and they're being asked by their constituents, what's this all about? What's your position? What's going to happen here? So we see a role there for us to help them understand pros, cons, what it all means, and also we've got a great industry body here in New Zealand, Blockchain New Zealand. So we're really active members of that. I'm on the board there, and we spend a lot of time in educational mode with traditional finance businesses, with investors, venture capital funds, family offices, etc., etc. So most of it is about education.
Okay. In the interest of education, one of the common discussion or misconceptions that I encounter, at least, and one that you can probably dispel, is people conflate blockchain with Bitcoin. Or take us through how you see the two things and why they get confused, and why one is necessary for the other or not.
Sure. So blockchain is it's a technology. It's a way of storing information. So it's also called distributed ledger technology. And so cryptocurrency is a way of using that for money, but there are lots of other use cases as well. So I'll explain what distributed ledger technology is. If you think about the traditional way that we have banked in the past, is I deal with a bank, and what the bank does is they have a centralized ledger, a list of all the transactions on my account that come in, money that comes in and money that goes out. I check that on my app, and they tell me how much I've got left. And when I want to go and spend some money, I do that through the bank. The bank sends the money on my behalf. And the reason that that is the way that money has been kind of custodied and dealt with in the past in a centralized way is because there hasn't been an alternative. And so the centralized way is, there's a bank. I trust them. They've been around for a long time. They say they've got lots of good security, and so I trust that, and I'm going to give them all my money. So whenever I earn my money from my employer, I give it straight to those guys, and they're going to look after it, and I trust that it's all going to be fine. The challenge is sometimes it's not fine. And sometimes the term bank run exists because sometimes things don't go well and people want to get the money out and they find out that it's not there. And that's because the model of banking is I take your money and then I lend it out multiple times. And I obviously, bank on the fact that not everyone's going to come and ask for it back at the same time. So it's going to be okay. And that's how I make a profit. So that's all very well in good times, but not in bad times. The other thing about a centralized ledger is using traditional currency like a New Zealand dollar is the people in charge of the traditional currencies like the New Zealand dollar, as we have seen through COVID, when times get tough, they can just make more of it. They can just print more. So we used to have the gold standard in the world back in the 70s, where every dollar had to be backed by actual gold in a vault somewhere. It's not anymore. So you can just print more money. And so the actual value of that money can decline. And I think the New Zealand dollar purchasing power has gone down by about 20% in a few years. So it can be quite significant. But that was the way we always did finance, because there wasn't an alternative, because you had to trust someone to look after things and to monitor the transactions. What blockchain does, what distributed ledger does, is it actually creates thousands of versions of that ledger, puts them on the internet, which means that if someone tries to hack one of those versions, all of the others will reject it. So all of a sudden, you don't need to trust a business, a company to do it, because it's viewable to you. The technology itself is trustworthy. And so if you don't need the likes of banks and centralized businesses to do that, all of a sudden you don't need to pay for them. And you don't need to rely on them working with other centralized businesses. So I'll give you a classic example of a difference between a traditional finance transaction and a crypto one. So during 2020, when I was getting into crypto, my nephew in the UK, it was his birthday, and I wanted to send him some money. I'm not a great uncle, so it was only $50. And so I went to my bank and I said, look, I want to send $50 to a UK bank. The cost was about $10, I think. Like, it was significant. It was a good, it was a good 20%. And it would have taken a week. And the reason it cost that much and it would have taken that long was because the way it works is my bank contacts another bank that contacts another bank that contacts another bank, and the money passes between them all. Each one of them charges some money for that, and it takes time. So by the time the money would have got to the recipient a week later, it would have been missing a fifth. And that's what happens in a lot of cases with remittances, where people are working overseas and send it home. With crypto, I can send it from me to my nephew, who is over 18. I can send it from me to my nephew. It's peer-to-peer. It took seconds, and it cost a couple of cents on the dollar. And so that's the big difference with a decentralized ledger. There's lots of jargon and lots of words around it, but really that's the guts. Is you no longer have to depend on trusting someone blindly with your information. All of a sudden, there's a way to do it in a distributed way, which is trustworthy. So one great use case for that is crypto. So applying that to money, but also there are other things that we do in a centralized way. So insurance contracts, for example, the technology, blockchain technology, allows you to automate contracts. So all of a sudden, you don't need a big underwriting team in a life insurance department. You actually have smart contracts that can give you the correct answer, and they'll get it right every single time. So it's a pretty transformative technology. But look, it's early days, right? So the main use case has been crypto so far, but there are lots of others. You'll have heard of NFTs. There are lots of emerging use cases, but yeah, crypto is probably the biggest one so far.
All the exchanges around the world have tried to build blockchain-based settlement processes. I think ASX had a crack at it. I don't know where it got to, but they haven't always worked. I think the cost to actually make it functional and integrated is high. Yeah. Okay. Great. In New Zealand, and I guess more generally, what are the? There's a lot of talk around tax and around disclosure and registration of products and so forth. How do you think this regulatory landscape will evolve from where we are? Where are we today, and where do you think it's going to go?
Yeah, so the great news is that licensing is coming to this part of the world. So towards the end of this year, we're expecting the Australian Treasury to announce a crypto framework, which is great. We've been calling for a long time. So I'll get on to New Zealand in a second, but what that will do is it will establish clear rules around things like capital adequacy, custody, listing criteria, leverage available on certain products, what products can and can't be offered. So that's coming in Australia. It's not in New Zealand. We'll keep an eye on. As a country, we'll keep an eye on what happens in Australia and usually adopt that a few years later. Our laws are slightly different to theirs, but that's where things are at over there. We do have clarity in both markets though on the tax treatment. So one of the myths that you'll often hear is crypto is a great way to hide things from the taxman. I'm here to tell you it is a terrible way to hide things from the taxman because the IRD and the ATO are very smart indeed, and the data's there, so they can trace not only what you did this financial year but also years before. So there are rules around crypto. It's treated as property, so there is a capital gain payable on disposal. The IRD's got a really helpful page on its website. So look, the rules around tax are clear. If you make a profit, you need to pay tax on it, as you would do if you sold another asset. The IRD and the ATO actually they've invested quite significantly, and we heard in the recent New Zealand budget as well. There's a lot of investment going into the IRD's capability in that space. So the government sees that this is a growing space. They see there's a tax opportunity there. The IRD need to have the tools to do that, and they're investing in them. So yeah, I think licensing is on its way to this part of the world. I couldn't give you a time frame for New Zealand, but we're certainly advocating with the government that it should be a priority. Although clearly they've got one or two others as well.
Even in the States, my understanding, and you potentially know a lot more than me, but it hasn't been, it's not clear where everything is, and there's a jurisdiction battle going on between the CFTC and the SEC, and whether it is a security for registration purposes or not.
Yeah, it's a really interesting one. So you've got regulators in different parts of the world taking quite different approaches. So you've got some regulating crypto as a traditional financial asset, others creating crypto specific regulators, and you've got others who just aren't doing anything at all. So I think it is becoming a bit of a competitive space because the regulators see, number one, some regulators see there is an opportunity for the country if we can create the settings that attract this business and protect our citizens. There are others who see that it's happening whether we like it or not. So we need to make sure we've got some protections in place and some rules in place. And I think if I think about Europe has introduced MiCA, which is a framework across the whole region, a really comprehensive crypto regulatory framework. Dubai, Abu Dhabi are leaders, Japan, Hong Kong, Singapore. So there are some really innovative countries. The question I think for the New Zealand government and the Australian government is, where do we want to sit? Do we want to be fast followers, or do we want to get left behind? And the challenge with crypto is it's international, and so if you're if New Zealanders don't have a good option locally, they'll just go online and go elsewhere without the protections. So, we would hope that the governments would embrace it and create frameworks.
Binance, obviously, you mentioned earlier, has grown very quickly to 200 million users around the world. That's not an insignificant number. How did it achieve this? What were the core components to driving that level of growth?
So the culture that we've built from day one, user focus was our most important value. And I know everybody says it, and everyone's got it on posters and all that sort of thing. I can tell you from inside the business, it genuinely is absolutely everything. And I've, been in countless meetings and decisions around business strategy, and that genuinely is the first thing. Um, Secondly, we've got a value which we call hardcore, which is basically about working hard and pushing hard and being ambitious. And so the business, the business itself is only 7 years old, and from day one has been a 24/7 business with huge ambitions. And good enough just isn't good enough, and pushing hard, and it's just been really, really important. So we were very lucky in our early days. To have a great founding team with some amazing experience. We attracted some customers at the very beginning, and used their feedback to parlay that into the early product features. Grew our reputation with crypto institutional investors and VIPs, and it grew from there. And we've just had a really, really aggressive growth strategy. And so, I've worked in the business for 2 years. I've done more work in 2 years than I've done in 20 before. Just the speed at which the business moves. And if you think about this, is an industry which didn't really exist 8 or 9 years ago, and so it's just like Uber. It was founding an industry, and so it was it was building an industry and wanting to grab as much market share as it possibly could, because it knew that as soon as the market became attractive, competition would start to grow. And so we got, I'm pretty sure we got to number one in about 6 months from founding, and we have managed to stay there ever since. So I think now we're about 50% of trading volumes globally. I'm sure the percentage was a lot higher before that, but the way that we look at this is really early. Crypto is, it's 1 in 4 Australians, like I said, 1 in 10 New Zealanders. So there's such a big opportunity to go. For us, listening to our users will always be the most important thing. So we have, a mad amount of product releases. Sometimes we're doing one a day. So really, really fast feedback loops from our customers, what they want to see, what they want to be different on the platform. So the platform itself evolves constantly. Product offerings, we try and be first to market with the coins that people want, with the products that they want. And so, that so far has been the secret sauce. But look, it's a new world for us as well now. We've got a new CEO. Our culture's evolving, because we started off as a tech company, a hyper growth tech company. Now we're a financial services company, and we've got a former regulator as our CEO. And so the game has changed, and so our strategy is always evolving with that market.
Okay, how does innovation work? How do you decide which things to pursue?
So we, in a typically crypto way, it's all through social media. We have if you look up #Binance Build, you will see requests and recommendations from our customers and what they want to see, and you will see the announcement of the new features, and then we will launch those features, and we'll test how well they're received, how well they're used. And so, and it really is a case of daily product releases and constant iteration.
Okay, wow. And presumably you release a whole bunch of stuff that no one subsequently wants, and then you take it away, and that's just the process of, I guess, discovering the truth, isn't it? Really.
I think the great thing from our point of view, being a young business, is we built the platform from scratch, and so we were lucky enough not to inherit an incumbent system with limitations. We built it from scratch, and so what that means is, we are able, and it's a privilege to be able to evolve that platform ourselves as we go. So we're always monitoring the analytics around what people are using, what not just what they're asking for, but once it's delivered, what they're actually using things for and how they're using them. And of course we'll keep an eye on our competitors, but we try and keep one step ahead of them.
What's the product or service that is most popular? Is it trading Bitcoin, or is it remittances, or how would you describe it?
So I think the main use case of crypto has been speculation. It's been people guessing that the price is going to go up, and what changed that was the introduction of stable coins. And so stable coins are the use cases for those has been remittance and also payments. So payments as a part of crypto has grown enormously in the last 3 or 4 years. So we've got a thing called Binance Pay, which integrates into point of sale, and we've if you go into petrol stations and retailers and pharmacies around the world, you'll be able to pay with crypto. Not yet here, but it's coming. So the utility is growing, but I think what really got it to its first trillion was speculation. But now we're seeing the use cases growing, and so that's why you're seeing ETFs not just for Bitcoin, but now for Ethereum and Solana, those tokens which have more utility and programmable because there's more demand for them because more businesses are using them.
And you mentioned competitors. The governments are also starting. Many governments are looking at launching their own digital currencies. How does that fit in with your broader strategy? If there is a government-backed digital currency available on the blockchain to the public.
So I think it's really important to understand the difference between a central bank digital currency and a cryptocurrency. So if we end up with digital cash in New Zealand and digital New Zealand dollar, the Reserve Bank can continue to print more of those, and so you still have the same issue with inflation. So that doesn't go away. What potentially goes away is some of the transaction costs that we have for transferring and for custodying. So it makes it faster, it makes it cheaper, but it doesn't make it crypto. The other thing, I think lots of old school crypto holders are a bit nervous about. Well, if this is programmable money, what control does that give the government? Could they use CBDCs to pay benefits, but not allow people to buy fatty food or cigarettes? Could they dictate what someone does and doesn't spend that money on? So there are some privacy concerns around it. Overall, we think it's an acceptance that the technology has merit and that it's superior in some ways to the traditional world. But we see there's a place for both of those.
It is interesting, right? That institutionalization piece again. If you've got central governments looking at blockchain and using it for central, for currencies, then it's a strong endorsement. Let's put it like that.
Yeah, absolutely.
My last question, Ben, is from here. I mean, as I mentioned in the intro, everything's changing at breakneck pace. Where to? What is it going to look like in 5 years' time for Binance and for the market as a whole?
So look, our strategy, disappointingly, I'm not going to give you an answer. So our strategy is we don't think that anybody can tell what's going to be popular in even 1 year, but 3 years, 5 years. And so, the days of writing out your 5-year plan and saying, here's what consumers are going to want in 2 years and we'll deliver it then. And we think those days are gone. But what we know is that it certainly will change. And so the approach that we take is we think of ourselves as a blockchain infrastructure provider. We've got an ecosystem of business units. So we've got a crypto exchange. That's the biggest thing at the moment. But we've also got a venture capital arm. We've also got an educational arm, a charity arm, lots and lots of different parts to our business. And we're constantly building and developing new ones based on technology that emerges. So I can't tell you where we're going to be in 5 years. I can tell you that we're going to be meeting consumers' needs and we'll be at the forefront, but I don't quite know what those consumers' needs will be just yet. A recent example is AI. Everyone's talking about AI. I've got to get into AI. we use that throughout our business in our daily operations. We know our customers use AI and trading algorithms, so that's just become part of what we do. And let's be frank, most of us weren't talking about it 3 years ago. So yeah, look, we'll certainly be we'll certainly be in the space. It may not be, the centralized crypto exchange may not be where the majority of crypto investors want to engage. By that time, we might have grown adoption, and then it will be about decentralized finance, and our Web3 wallet might be the place that people choose to access the market. So we're focusing on all of those things to make sure that we're in the right space when the time comes.
And I guess the overriding message is it's not going away. The fringe is no longer fringe. It's very much becoming increasingly mainstream. And New Zealand's just a little bit late to the party, perhaps. Okay. Thank you very much for your time, Ben. It's been a great conversation, lots of really insightful points, and thank you for joining us.
I really enjoyed it. Thanks for having me.
New Zealand Funds Management Limited is the issuer of the NZ Funds Active Income Series, NZ Funds Active Inflation Series and NZ Funds Active Growth Series, together the NZ Funds Active Series, as well as the NZ Funds KiwiSaver Scheme, the NZ Funds Managed Superannuation Service, NZ Funds Wealth Builder and NZ Funds Income Generator. For further information or to request a copy of the product disclosure statement for each of these, please contact NZ Funds or visit nzfunds.co.nz. This recording is provided for information purposes only. The information provided is not intended as a substitute for specific professional advice on investments, financial planning, or any other matter. Past performance is not an indication of future returns.